Hey, YouTube family, welcome to another video of The Kevin Strong Show. And in this video, we're going to talk about how medical debt is probably the leading cause to bankruptcy. There's some new information about medical debt and how they're going to treat that regarding you buying a home. So please stick to the end of this video. I'm going to talk about that. And there's some new information out there that's going to help consumers who have medical debt, and it's actually going to result in helping them get a better credit score. Once again, welcome to the show. If you're enjoying this content, I encourage you to comment, share, because you know I care. So without further ado, let's get into this video. Once again, we're talking about medical debt. That is probably 57% of all bankruptcies are induced by medical debt that has been incurred by the average American who simply can't afford to pay for medical expenses, or they have a medical coverage that lapsed, or they have inadequate insurance. Either way, it's a big problem in the United States. I'm not making an indictment either way. On the left or the right, I'm just basically sharing the statistics with you. Approximately, like I say, 50% of Americans carry some type of medical debt one way or another. Now, all of that may not necessarily show up on their credit report, but they have unsatisfied debt. Almost 50% of Americans, and in 2020 it was at 46%. So that number has gone up a little bit within the last couple years. 57% owe at least $1,000 in medical bills, and about 46% of those folks who have unpaid medical bills have been turned over to collections. So if you're in a situation where you don't have good insurance, or you had a situation where you were unable to pay for medical expenses and you found yourself getting turned over to a collection company, what can you do? What can you do in order to try to mitigate or reduce some of that debt? That's what we're going to talk about in the first section of this video. So without further ado, let me go ahead and pull this up for you guys. Okay, so right here, we're going to talk about how to negotiate medical bills. There's a couple of key bullet points here that I want to go over. Get your documents in order, and that's the first bullet point right here. Ask for an explanation of benefits. It's called an EOB, and summary of benefits and coverage, SBC, from your health insurer to understand how your coverage works. You have a right for this information. I would definitely fact check any type of medical bills that you get from a hospital. It is very common in that industry for them to make errors, and you are due it's your right to find out if you're being charged correctly. And that kind of transitions into the second bullet point. Check your bills for error. I'm going to pause right here. I'm not going to advocate a particular company, but I am going to tell you something that very few people know about, and very few people have talked about this on the internet. And there's actually companies out there that will audit your medical bill statement to find errors. Now, the way they get compensated is that you have to agree to give them a percentage of the amount of money that they save you. But some of these companies are very, very good in finding errors. There's a lot of duplicate payments when it comes to medical billing, and they specialize in that stuff. So you can save a ton of money. So I encourage you to do your own due diligence and find some companies out there. If you have a substantial medical bill, even if you think it's accurate, still have somebody, quote unquote, financially scrub that billing statement to make sure that the amount that they're charging you is the correct amount. The third bullet point here, reach out to the hospital billing department. You may be able to ask for a discount for paying up front. Take detailed notes of who you speak with and any agreement you make. So you always want to document any conversations that you're having with a potential creditor, just for your own edification, because you just never know when this thing can either spill over to a collection, or you might find yourself in front of a judge having to fight a certain debt that they say that you owe. So conversations that led up into after the bill can possibly help you if you get to a situation where you have to defend yourself in a civil lawsuit. Do not do your research about the cost of care. Use a cost comparison tool. This healthcare blue book, I'm familiar with it. It's okay, but at the end of the day, these hospitals have basically a monopoly on hospital care in the United States. I wouldn't put too much stock in that. See if you qualify for financial aid. Now, this is a pretty good one. I did some research on. The Affordable Care Act requires nonprofit hospitals to offer financial assistance, such as interest-free payment plans and discounted care for low-income patients, according to the NCLC. So you may want to look into that if you fall into that category. Hospitals typically can try to work with you. They're a little bit more easygoing and affable, so to speak, than if they have turned that debt over to a collection company who has pretty much bought that debt for pennies on the dollar. And if you've ever dealt with collections as a business, as I have, or on a personal level, which I also have, here to say that obviously collection companies can get quite nasty. So as promised, there is some good information here. I hope this is helping you out. I'm going to transition to something that's really going to be a boost, so to speak, on this topic. And it's about how the credit bureaus are actually going to start looking at how they look at medical collections on your credit report. So I'm going to go ahead and start to pull that article up here. I found this article and it was really good information. And I think it's actually going to help you guys with a lot of things in terms of improving your credit and not feeling that you're behind the eight ball, so to speak, because of the amount of medical collections that you have on your credit report. So let's see here. Okay. The three major credit bureau agencies announced Friday. What was this article? So this was pretty recently, right? Just yesterday. They announced Friday that they will strip 70% of medical debt information out of consumers' reports starting July 2022. So this summer, midsummer, you should actually start to look for this. If this does not happen, I would probably write to Equifax, TransUnion, or Experian, which are the three major credit bureaus that most lenders look at your credit profile to determine whether or not you're credit worthy. And it says that medical collection debt will no longer appear on credit reports and if that debt has already been paid. The agencies are also increasing how long it takes for that debt to appear on a consumer report from 6 months to a year. I think the impetus behind this particular verbiage was that there's so much billing errors with hospital bills that some of this stuff gets turned over to collections. Probably over 70% of the time, if not higher, that amount that they're claiming that you owe that appears as a collection on your credit report is just simply not accurate. And that's why I mentioned earlier in the video, you probably would do yourself some justice of hiring a company that specializes in auditing medical bills to find errors so you can save quite a bit of money. But once again, they will no longer appear on your credit report once they have been paid. Okay, so please keep that in mind. This is something that came out from the Consumer Financial Protection Bureau, CFPB. That's kind of like a government entity watchdog that kind of watches over things like credit repair companies. You can report various things to them, to the Attorney General, if you think you've been scammed in any way. So it's a really good agency. Some people like them. Some people don't. I guess it depends on what side of the fence that you're on. But people are starting to, when I say people, the creditors are really starting to, let's say, take a step back and not look so harshly at medical debt because so many individuals are dealing with it. A lot of people didn't know that FHA, the Federal Housing Administration, has a very lenient loan guideline or lending guideline when it comes to medical debt and medical collections. And I finally want to talk about that because don't let medical debt get you, prevent you from actually owning a home. You still may be a very good candidate for home ownership despite owing thousands of dollars of medical bills. And that's what I wanted to talk to you guys about. So let's go to that article here and see if I can pull that up. Let's see here. Where's the FHA one? There we go. Okay, here we go. Guidelines, FHA loan for medical collections. So obviously this is a situation where you had a hospital expense, you couldn't pay it to no avail. They turn it over to a collection. And the collection company is putting that information, that negative information on your credit report. It could be thousands of dollars. And you might be thinking, oh my goodness, me and my husband or myself or whatever your situation is, I'm not going to be able to afford a house because I have so much debt in terms of it's showing up as a collection, a medical collection. It says here as a first bullet point, medical collections are exempt from how non-medical collections are treated. Medical collections will not be used in the DTI calculations, regardless as to what those medical payment balances are. So DTI is a fancy acronym for debt to income ratio, and that's basically how a lender is going to look at all of your debt in relationship to your expenses to determine how much house you can afford. That's the simplest way to put it. So I tell people all the time, the best way to kind of get ahead of this, to figure out what your DTI is, your debt to income ratio is, take all of the debt that shows up on your credit report. That's pretty much your DTI, because that's the same guideline that the lender is going to be using. Now, some of them may use some other metrics to determine soft costs like utilities and things like that. But basically your DTI, your debt to income ratio, is going to be arrived at looking at the monthly debt that you have on your credit report. FHA lenders should not take medical collections into consideration in any way when underwriting your FHA loan. Let me repeat that. FHA lenders should not take medical collections into consideration in any way when underwriting your FHA loan. So because of automation, some of these loans are done automatically. I think it's called desktop underwriting. I've been out of that industry for a while. So if I'm not using the right acronym, somebody drop it down in the comments, but I think that's what it's called. It's just automated. So if your particular file gets flagged, or if a lender or broker comes back and says, well, hey, there's some medical collections here and the system didn't accept it, it may require what's called a manual underwriting, where they physically have to put eyes on your file, so to speak, and not just run it through an automated system. Clearly, you can point this information out to the broker or the lender that, hey, if this is an FHA loan that you're applying for and you're being denied because of medical bills, that should not be the case. So that's really, really good information. Here's some other stuff that's really germane to FHA guidelines as it applies to medical collections. You do not have to pay any non-medical collections that are on your credit report if it's less than $2,000. So non-medical collections that are on your credit report, if it's under $2,000. However, those collections may count towards your debt to income ratio. As a result, you may need to pay some of all of them. You may need to pay some or all of these to qualify for your FHA loan. So here's the deal. If you have $2,000 or less in medical collections, don't worry about it. FHA is not going to count that. And more importantly, it's not going to get factored into your DTI. However, if you have over $2,000, like in this example, $5,000 in collections, 5% of the total collection balance, in this example, $250 will be used on your loan application as a monthly obligation. So what they're saying here is that if you have over $2,000, they're going to take 5% of that amount and then factor that in as a monthly debt. $250 is a big deal. There's a general rule, and this math equation may not be updated, but generally speaking, for every $10 worth of debt you have, you lose like $1,000 worth of purchasing power. So if you have a $250 debt that has been tacked onto your debt to income ratio, in this example, and you qualify for a $400,000 home, that $400,000 home, you have now been reduced by $25,000. So now you only qualify for a $375,000 home. That's a big deal. That can be a nicer kitchen, a nicer area, a better school system for your kids. So it is a big deal. If you find yourself in a situation where you know you're going to have over $2,000 worth of medical debt, I would try to work out some type of agreement with the collection company, obviously, to get it lower than that amount, because you don't want something like a collection to prevent you from, let's say, being in one neighborhood compared to another, because you're getting hit with this 5% penalty that's going to be tacked on to your debt to income ratio. So I hope you enjoyed this video. That's pretty much going to be it. I know it's a big topic. Like I said, a lot of people are facing medical debt. It is the leading cause of bankruptcy in the United States. I hope this information was good in terms of what you can do to look for billing errors. Don't forget to hire a company that will scrub your medical bills to make sure that that debt is accurate. Or if they find any errors, they'll basically work as an advocate for you, but they are required to get some kind of compensation based on the amount of money that they save you. And last but not least, the credit score thing is a good thing. And don't let medical debt keep you from home ownership, especially if you're applying for an FHA loan. So if you're enjoying this type of content, once again, I'm going to ask you for a tremendous favor. Please hit the subscribe button, comment, and share because you know I care. This was the Kevin Strong Show, and I'll see you guys in the next one.